So hello guys. Today I'm gonna teach you about stop loss and the basic things which you need to know about the market. So this one is really important before you learn liquidity. And this one and there's another video which I will talk about different kinds of orders. So I want you guys to know this properly before we go to liquidity, or everything is gonna be messed up for you guys. So I hope you actually watch this video because this is gonna be really important. You need to know about this video. So first of all, let me tell you how we make money in Forex. Okay. So when you click on buy, you are actually entering a market. Okay. It will be an instant entry to the market. If you guys know this, you can skip it for sometimes, or else, just watch it so that you'll understand it better. So when you click on buy, you just enter at that point. So you're predicting you will gain money when if you press buy, you will gain money if the graph goes up. You will lose money if the graph goes down. Say for example, I just press buy over here, this point, like exactly over here, and I will gain money as long as the graph goes up from this point. But if the graph goes down like this, then you're going to lose money. So that is how people gain money in Forex. Isn't it easy, right? So it's the same thing. When you sell, you're predicting the graph to go down. So for example, you press sell over here, exactly over this price, and the price is going down. So you will get money when the graph moves down, and you will lose money if the graph goes up. You call it buy. Some people call it as buying as long, or in Indian market for futures and option, you call it as call. Okay, call option. And then for selling, you call it as put. Put means you'll get money when the graph is going down. So I hope you understand. So just take a screenshot of this. Just remember this: buy or long or call means you are gaining money when the graph goes up, and sell, put or short means you're gaining money when the graph goes down. It's basically you predicting the graph. If you predict it right, you are gaining money. If you predict it wrong, you're losing money. So that's the basic thing I want you to guys to know. And then what is stop loss? So stop loss is a price where your trade will automatically close in loss. So basically what we use for stop loss is this tool. Sorry, not this one. This one. For example, I'm taking a long trade. So I want, for example, right now the price is at 100. I'll just type it as 100. This one. This is where the price is at. Wait a second. Why is it not coming? Yeah. This price, this line is the current price. So I just entered a trade. I It is 100 rupees. Okay. Don't think about this. I'm just giving you an example. And my TP or take profit is 105, and my stop loss is 90 95, for example 95. So what will happen is, if the graph, right now the graph is here, so if it goes up, nothing will happen. But unfortunately, for some reason, the graph came down and went like this. So at this point, exactly at this point, this price, the end of the red box, you will exit out of the trade with 95 rupees loss. Say the price is 100 rupees, so you lost 5 rupees. So that's the maximum loss you will get. So uh, it's mandatory for, this is just, think about it as a rule. Okay, rule number one: do not enter a trade without a stop loss. If you enter a trade without a stop loss, you're gonna lose a lot of money. Okay, so first rule: do not enter a trade without stop loss. When you're entering a trade, you just enter the price over there. So the price, you just click on buy. For example, you just click on buy over here. It starts you just enter the instantly you enter the market. So, and you put the stop loss as 95. So the maximum amount of money is set. Like, you know how much you're gonna risk. So you know, I can lose 5 rupees. So 5 rupees or $5. So you'll be like, okay, if it goes beyond 95, goes less than 95, you're exiting the trade. If it goes more than 95, you're getting money. So take profit is the same thing. You just stop loss is basically a price which you set. You just exit. Like, let me give you the proper definition. Stop loss is the price where you where your trade will close automatically in loss. So the maximum amount of loss, stop loss, just the name itself has it. We use it to stop loss and protect our account capital. So it is mandatory everyone who is watching this video, who is learning my from my YouTube channel, I want them to always put a stop loss. Stop loss is really important when you're getting into a trade. No matter how confident you are, you have to put a stop loss. And take profit is the opposite. So take profit is the price where your trade will close automatically with profit. So we use this tool both, this is a long position tool, and this is a short position tool. So if you're selling, you put it like this: the stop loss will be up and the take profit will be down. If you're buying, you know how the red part is you're losing money, and the green part is you're gaining money. You can customize that also, but for beginners, I'm just keeping it as it is. Okay. So uh for a what is a take profit? Take profit is opposite of stop loss. So take profit is, for example, I'll just delete this off. Oh wait, I deleted the wrong one. Wait, I'll just okay, I'll just click this. Yeah, sorry guys. Okay, so this is where you entered. You went like this. Unless you hit here, the stop loss won't get active unless you hit the lower part of the the box. If it's here and it just went up, barely it didn't hit, then you're still in the trade. You didn't exit the trade. Okay. So let me undo it again. Okay, wait, what the hell am I doing? I think I did something. Okay. Huh. So yeah, it's the same thing. You just enter the market. The market does something like this, and then it came and went up. So this is the place where you take the profit and exit. So I want you guys to always keep a take profit and stop loss, because if you just let it run, let the profit run, you know what will happen? It might go up, and then unfortunately at some time it will come down and you will lose money. So whenever you have an opportunity to take the profit, like in certain levels, we will talk about it later. So in certain levels, you have to take profit. So these kind of take profit and stop loss, I want you to note this around, because this is going to be important. The stop loss and take profit is basically pending orders, unpending orders. Okay, it's one kind of. There are different pending orders. We will get into that in the next video. Okay, before learning liquidity. So basically, pending orders is liquidity. I'll talk about it later. So these stop loss and take profits are pending orders unless the price reaches this point. The price which you set as stop loss or take profit. When the price reaches this point, it gets executed and you exit the market. Same thing, if the price, unless the price reaches 95, you won't exit the market. Unless the price reach 105, you won't exit the market. So in this case example, you just gained $5 and you exited. You are in a profit of $5. For stop loss, you are in a loss of $5. So that's what basically you do for stop loss and take profit. Okay. So, and then there is risk to reward ratio. So basically in forex we use risk to reward is really important. I'm just deleting this stuffs. So how do you calculate the risk to reward? So what 1:2 risk to reward? I'll give you an example. If I'm entering a trade with 1:2, 1:2 risk to reward. So that means if I have a fixed amount in my mind, okay. I just want to lose $5 for this trade. So if it's a 1:2 trade, so in the example of $5, if it's a 1:2 trade, I am risking $5. Okay, wait, what is happening over here? Yeah, I am risking $5. Risking $5 to gain what is 1:2 to gain $10. So it'll be same. If you're risking $100, you're gaining $200. If it's a 1:3, if you're risking $100, you're gaining $300. So basically, you can wait a second. Basically, I want you guys to note it down because I know these things are simple, but I want you guys to understand properly because next time when I'm talking about liquidity, I don't want you guys to think about pending orders and all those things too much. So pending orders are basically when the orders where unless the price hit that point, it won't get executed. Okay, this when you click on buy, that is an executing market instant market execution order. Okay, so when you click buy or sell, you just instantly get into the market, and the TP take profit is where unless the price hit this price, this end of this rectangle, unless this is the price. Okay, this is 105, this price, unless it hits 105, you're not entering exiting the market. So if it hits 105, you take the profit and get out. Similar for stop loss. So 1:2 risk to reward is like you're risking 100 rupees, you're gaining 200 rupees. Simple math, basic math, right? So how can you know how much risk to reward you're using? So for example, in a trade, this is why this tool is really important. Wait. I'll keep it over here for now. Okay. So this tool, see, you have a structure like a market structure. You entered a market. Okay. Uh, okay. You entered the market over here. Enter the market. This is the line which you have to use for entry, and your stop loss is over here, and your take profit is somewhere over here. Wait, see over here, risk to reward. This is 2. If your take profit is over here, this is 1:5, and your stop loss is somewhere over here. If you move around the stop loss, your risk to reward changes. If you move around the target, your risk to reward changes. So you need to, always the stop loss might not be this big. Sometimes it might be this big. So it'll be a 1:1.6 trade. So what that means is, for example, in this trade, oh wait, in this trade, wait, let me put a proper price. Okay, just think about it as 1:3. Okay, 3.9. So I'm risking $100 in this trade. I am risking, like I'm telling, okay, I know the market is going to go up. So I'm risking $100 for it. If it goes here, I'm exiting the market. So the stop loss is over here. If it goes down this point, so I will lose only $100. But if it hits this take profit, if it goes up till where I predict, I am going to gain $300. So 1:3, 1:3. I'm gaining $300 for that trade. If I lose, I will lose only 100. You can do the same thing for $5. I'm gonna lose only $5 over here. If I, for example, you can that is called position sizing, which is really important. This is the best thing you need to learn about trading, like risk management. This is called risk management. So, for example, $5. I'm risking $5. If the price hits here, I'm risking $5. But according to my analysis, technical analysis, I predict the price will go up till here. So this is actually a 1 is to 3.09 rupees trade. I'll just say 1 is to 3 trade. Okay. So I'm gonna gain, if I'm risking $5, I'm gonna gain $15 over here. Or if I'm risking $100, I'm gaining $300 over here. That is how we gain a lot of money in the market. So depending on the volume which we put, okay, we'll talk about all those things later. Okay, I need, okay. This is one more thing which I needed you guys to know. And usually you learned whether what is stop loss, what is take profit. So where can you see stop loss? So usually stop losses will be there below support and above resistance, or below support or resistance, below or above highs or lows. Swing highs and lows is basically what is highs and lows. Okay, below liquidity. We will talk about liquidity later, but just think, if a market is moving like this, boom, 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 boom. So if a market is moving like that, there is stop loss over here. There will be people who will keeping their stop loss exactly at this high. Okay, because that is where their trading strategy might get invalidated, or there will be stop loss over here below low. Usually everyone keeps their stop loss either in highs or lows, or in support or resistance, or the points of liquidity, which we will talk about in the future. That is the main reason why I'm teaching you stop loss, because people get confused because they don't know what is a market order, what is a pending order, what is a sell limit, buy limit order. These are the things which you guys have to know. So similarly, the take profit is also like, usually it'll be in the support. You know what support and resistance is like. So it'll be somewhere like stop loss or take profit. Usually people trade like this. So the stop loss will be on top of support and resistance. If it's a buy or a sell, like maybe it'll be like this, or maybe it'll be like this also. Like these are the lows, right? Every lows there will be some stop loss. Okay, and every high take profit will be also somewhere around. Sometimes it will be over here. See, this is how, and see, stop loss might be over. This will be a stop loss for a person, and this will be this low. This low might be a target for some people. So this is how people trade. Okay, so just remember those steps for now. That's all there is to stop loss and take profits. Stop loss and take profits are usually. I want you guys to remember this. Stop loss and trade take profits are always in support or resistance, trend lines, and highs and lows. Everywhere there is stop loss and take profit. So these are the places where you find stop loss and take profit. And I want you to know the risk to reward ratio also. You use this tool. This is the one of the most important tools which you'll use. The long position and short position too. Short is for selling, long is for buying. So short, you put it like this so that you can see the risk to reward ratio. If you have to adjust the stop loss according. If your stop loss is here, like you are entering here, your stop loss should be all, most probably it will be somewhere around here, and the target will be somewhere around here. So this is a 1 is to 2 trade, 1 is to 3 trade. This, where did I find it's a 1 is to 3 trade? This one. And the pips, this is the other thing which you have to see, which we will talk about later when you're learning position sizing. Okay, that we will learn it after, towards the end of the this boot camp, or how learn how to trade this playlist. Okay, so yeah, that's basically it. Always remember there will be stop loss and support, resistance, highs, lows, trend lines. So that's all. And I hope you understand what is stop loss and what is take profit. Unless it hits the price, unless it hit this point, you won't exit the market. Unless it hits this point, you won't exit the market. So that is basically stop loss and take profit. I hope you guys understand. And uh, I'll be posting another video tomorrow. Okay. So stay tuned for it. And I hope you guys learn it properly, because after next video, I'm going to teach you about liquidity. Okay. That is perhaps the most important thing ever in trading. Okay. Liquidity is what moves the market. So before learning that, I want these things to be clear, because I don't think you guys have actually executed. If you guys have entered a market, then you don't have to learn about stop loss and take profit. And if you don't know, I want you guys to know about this. Okay. So always, this is one of my trading rules. Okay. If you guys are my student, I want you guys always to put a stop loss. Do not enter a trade without a stop loss. Stop loss is mandatory for your trade. So yeah, that's all for today. And bye bye, guys.